Hello there, welcome to my YouTube channel. My name is DF Basy. If you're new to my YouTube channel, please kindly like and subscribe to the YouTube channel. So let's dive in. So today I'll be teaching you how to trade structural liquidity, right? The big name, the big question, structural liquidity. So most of you have heard of structural liquidity, most of you have known about it, but don't really know how to trade it properly. So now structural liquidity, what does the name come from? It comes from a structure. So we all know that the market moves, creating higher highs, higher lows, higher lows, and all. But inside all of this, there are structures. This is a structure, this is basic market structure. But inside all of this, there are structures, and inside those structures, they create liquidity from one swing point to another. Hence, the name structural liquidity. So just sit back and watch the end. I'll be unveiling how to trade the structural liquidity, how to set entries and have precise entries and accurate SLs to give you profit and maximize your win rate and build an edge around the trading space. So without further ado, let's dive in. So with your basic understanding of market structure, which is this, of the higher, let's say for a bullish structure, you have the higher high, the higher low, the higher high, and the higher low, right? So from this, you know that from here, from there to here, and from there to there, it's called what? A swing structure. It's called a swing structure. So inside this swing structure, right, this structure here, this particular swing structure, this structure here, this low, can form as liquidity for the market, whereby market comes, taps there, respects a block, and then buy, right? Respects a block. Let's say there's a block here, respects a block or a camera and buys from there. So hence the name, we call it structural or liquidity. So now this is how structural liquidity looks like. But first we have two type setups for this. We have the type 1 and the type 2. So basically this is the type 1. You have the sweep of the low of this low, market goes back, break structure according to a trend. Then you have market come back, mitigate, break structure again. You have market come back, sweep the structure. After sweeping the structure, then it bounces back, then it buys. So this is it. This is it. Then you mark this out. You have this block. Market comes back to respect. Then now this is your liquidity, right? Then you have this. Market does this, break structure, sweeps, break structure again, creates liquidity, comes down, break structure, sweeps, and this. So you have your structural liquidity over here. And you have this. So most people trade from this QMR, which is this. Most people trade from this QMR, yeah. But I prefer this other setup, trading from the other block, which is here, right? I prefer trading from that other block. So for me, this is a type 1, this is a type 2. The difference is trading from the block. Then this is you're taking the trade from the QMR, right? Taking the trade from the QMR. There is another setup, the type 3 setup, where you have this, sorry, That's so most like in this setup, market doesn't the low that is caused like the liquidity doesn't break structure on its own. Let me explain that better. Hold on. All right. Now, if you look closely over here and over here, you can see there are break of structures to the upside. This this low break structure, this other low here, that is liquidity break structure. As this one comes, as other guy comes, as it taps the other block, it break structure, right? But here the same thing. The break of structure first, second break of structure before the third. But in here, there's only one break of structure, which is here. So this guy that sweeps this low here, right? It doesn't break structure, but it comes down and creates a liquidity that breaks structure. And this liquidity comes back, comes down, and it's now taken out. This is the structural liquidity taken out, bounce, then before breaking structure again. So can you see this? So for me, this is the I rarely trade this setup, this particular setup. I rarely trade it, but we have DAX. DAX, this is what DAX trades. I know most of you must have known DAX. This is what it trades, but mostly I trade this, but I like taking from the other block. I like taking my trade from the other block, which is this for me, the type one, and also trade this, take it from the other block, the type two. He takes the type, these are the type two from the QMR, right? So now without further ado, basically what I've said, this is your structural liquidity, this guy here. That's your structural liquidity. So let's call it SL. Let me put a dot. It won't be our regular SL. Structural liquidity. There. We have it here. We clone it again. All right. So we have it here and we have it here. So that's a structural liquidity. So this is a structure that it breaks structure. This is a structure. This is a low. Inside the structure, these are structures, right? This is a structure. But we have this turning to a liquidity. So hence the name structural liquidity. Hope I've been able to explain that in the best way. So now I'll be going to the charts to identify this so that you guys can know how to use this to trade. And I'll be showing you the strategy I use and the confirmations I use. So normally on this particular structure, on this particular pattern, this is a strategy on its own. I enter aggressively. I basically set limits. So if I'm to trade this, I'll just set my limits here, set my limits here, and take the trade and place the trade to break the next structure. Same thing I'll do over here. But my SL in this QMR, SL is below the QMR to avoid taking out early, then targeting the what the next break of structure. Here on the other block too, I'll be doing the same thing, except below the other block. And where will I be targeting? I'll be targeting the next break of structure. This is a very, very high probability. For me, this is my high probability setup. This is my high probability setup. This is a high probability setup. This guy too is a high probability setup. This guy too is a high probability setup. Any scenario, you need to train your eyes on how to identify them and how to use them, how to spot them in the market. So basically, we spot them on the 4 hours or the 1 hour. So let's break down to the 1 hour and do some spotting so that you guys can understand what we trade here. So basically, you can see this trade I took. This was a sell on GBP card, 1 hour time frame. What do you see? You see our structural liquidity. See this inverted. This is the head. And this is the structural liquidity, break structure to the downside. What market does, it comes back to the other block and then boom, we have a sell. So now if you can look closely, you can see that in there we had our what? We had our break, our market break structure. First time, our market break structure. Second time, our market break structure. The first time, break structure the second time, then market came back to sweep this what? This structural liquidity here. Then tapping this other block here, then selling. Right? And what did market give us? Gave us 1:3. Clean trade. Hit TP. Very clean trade. Very, very clean trade. Right? So that's my type one. That's my I love trading that setup. It's a very, very high probability setup for me. Let me to show you guys more about structural liquidity. Okay, let's go to past data. The past trades I took. Now, let me clear all of this. Hold on. Okay, they're all gone. Now on this chart, what do you see? I'm using the data that happened, data we have from here to here. This are where I had volumes of trade, plenty trades on structural liquidity. That was was that late last year or early this year? This is November 2025. So late last year I had trades here. So now let's dive in and let me show you how the structural liquidity looks like and how to trade them. I remember I enter aggressively. So remember identifying our pattern. Remember the pattern, this is it. You have this here, have the break, come back. These are type two. Have the liquidity here before market breaks. What the market do? Come back, sweep the structural liquidity, tap the other block before buying. And that's what we do. You mark out the other block here, mark out the other block, mark out your liquidity, structural liquidity. And what did you do? You set your limit, keep your SL below the block, give you breathing space, 20 pips. And with this, what the market do? It did 1:8. It taps the block. Market came down from there, tap the block, but 1:8. Very clean profit made. Then moving along, we waited again. Market formed the structures. That's why I told you guys you need to backtest so that you can identify these sectors and these structures. So what do we have again? We have another structural liquidity. And where is it? It's here. Now look closely. What happened? We have this low. Market swept the low, came back, bounced up, gave us a liquidity. This still type 2 setup, gave us liquidity. Then before you know it, we mark out this block. And voila, what the market do? It came and tapped the block. Then it bought. Tapped the block and it bought, giving us 1:6. Can you see you can have higher win rates just understanding, being able to understand and identify these structural liquidities. You make a lot of profit. So this 1:6 with this. Let me check what again. Where do we have it again? This could be one. This is it. You use this block over here. Then this will be your liquidity. Mark your X. So basically, what did I just see? I just saw this. I just saw this. The sweep of this low, the market did what? Came back up and gave me a pull. So I automatically I took this as my structural liquidity. What will I be waiting for? Waiting for market to come back, sweep the structural liquidity, tap this zone, and buy. Right? All boils down to your ability to identify this setup, identify them in the market, and also trade them. So let me go to another trade I took. Let me check on which trade. But still BTC, BTC USDT. There's a trade I took on this structural liquidity. Okay, I even have a setup here. So now this is the first trade. I have this trade here. What do you see here? What I can see here is market did this. We have a sweep of this low, sweep, market pullback. You have a liquidity here. Then it goes back up to break structure. You check a break structure, clean break of structure. What did market do? Market sold off from there down to here. Tapped after sweeping the structural liquidity, tapped the other block and you had a buy. A very clean buy. You had a very clean buy. So automatically I just set my limits on the block. Then my SL below the block and target 1 is to 3 and market just triggers and then it goes. It works effectively. When I mean effectively, I mean it. Though there are sometimes where you have losses, just like this one where you incurred a loss here. It took a loss here. Though on this we have another structure that formed. Something I backtested and I discovered that market does this. After you have the structural liquidity, after market sweeps this low, you have break of structure, then you have this your liquidity. Market comes back instead of respecting this block, it sweeps the block, closes back inside, then bounces back on another block to continue the trend to break structure to the upside. So basically, that just looks like this. That just looks like this. Then you have a liquidity. But if you're on my Telegram channel, I explained this earlier on a thread on X and O. So you'll be a block here. You'll be a block here for continuation, and you take the trade from there to break overall structure. To break overall structure over there, right? So that's basically how this the other set of what happened here. But I was already on chat. So remember I set I for the strategy for the structural liquidity how when I'm trading it because this is only basically only what I trade. So once I do this, I only set I just set limit and keep it there. I wasn't really on my charts to check what happened on the market. Also, let me give you another instance what happened on the card. I think there was something a setup that played that last week. Okay, structural liquidity. If you look at this, you can understand what structural liquidity. You can see a structural liquidity here. You have this. They have the sweep of this low. Market comes back. They have this. They have this guy coming back up, and this guy is sweeping this guy to come back up. If you look at that, look at you take this guy as your other block. Then you take where as a liquidity, this guy as a liquidity. So now there are two setups here. If you look closely, there is one and there is two. So now this one comes in when you use the other block as your liquidity, as your POI. Then you keep, sorry, you keep your SL below the other block. Then you target 1:3 because I target 1:3. So that's 1:3 and you're done. Hit TP and you're out of the market. Then this other guy comes in. Yeah, when you're using the QMR, keep your SL below the block. This is the QMR here. Sorry, that's the QMR. I want you targeting, you're targeting 1:3. So now my issues with the QMR is basically it always have large SL. That's why I like taking from the extreme, the block. So on this trade, I wouldn't have really been bothered of this guy, this QMR. This is where I would have taken this trade from. Here. This is it. And with this, I can even get 1:4. Can you see how clean and beautiful it is? It's simple. Just if you can basically understand and know how to identify this setup. This is it. Sweep. It's more likely like a head and shoulder. Yeah, you have your shoulder. Then you expect market to come back down and sweep down your shoulder, then tap and buy. That's basically it. So let me look for another setup where we have it. Let's say which currency pair. I took a trade on. I don't remember the trade I took. Which trade did I take? It's a GPCHF. GBPCHF. Okay. All right. So we have GBPCHF. I took two trades. So if you look here, if you look closely, you have here, you have the first structural liquidity. These are down trades. And note, when you're trading this, when you're taking trades using your structural liquidity, you need to also follow the trend. Ensure that you're trading according to the trend. Ensure you're following the trend while trading. Trade according to the trend. The trend is your friend. Follow the trend. So now in a bearish trend, what we'll be looking for? You'll be looking for a structural, you'll be looking for this bearish structural liquidity. You'll be looking for what I showed you. You'll be looking for this. That's basically what you'll be looking for. Basically what you'll be looking for. You'll be looking for sales. In a bearish trend, you want to go and be looking for, in a bearish trend, you want to go and be looking for this. Sorry. In a bearish trend, you won't go and be looking for this. You won't go and be looking for it. This is for a bullish structure. Why? Because you need to know that market is breaking structure to the upside. Market is breaking structure to the upside. While in a bearish structure, market is breaking structure to what? The downside. In a bearish structure over here, market is breaking structure to what? The downside. So you'll be looking for this if you want to sell, then you'll be looking for the bullish structure if you want to buy. So this is what you'll be looking for. So in this, over here, I had this setup, set my limit, and market triggered, and profits, it dropped, it bleed. Then the second limit was here, it triggered, but I wasn't, this is the trade I took, but I hit loss here, took a loss here. So with this, I got 1:4 and I took a loss of 1 hour. So overall, I'm still profitable. I'm still profitable with 3 hours. So all what you need to do is just understand how this concept works, understand how to mark them. If you study your chart well, you see how these patterns are. You see them well. Study, backtest. This is for the bullish pattern, and this is for the bearish pattern. Here, you have liquidity. Now here, liquidity in your block. I'm telling you, this pattern changed the trading game for me. This is a high probability setup and it works majority of the time. If you can understand the setup, know how to use them, you make profits in the market, your win rate will increase. And this is an edge. This is a very strong edge. So now, after knowing this and knowing how to set this up and how to take this trade and also following the trend, you need to know something. To sell and to buy, you need to take your trades at different zones. How many of you have, if you're familiar with your Fibonacci tool, you need to keep your Fibonacci tool at 50%, using your Fibonacci tool at 50%, right? Fibonacci tool at 50%. So now you should be looking for buy setups where at the discount zone, which is here. You should be looking for buy setup at this discount zone, and you should be looking for sell setups at the premium. You should be looking for sell setups at the premium. So now you should be looking for these buy setups at the discount zone, and you should be looking at sell setups on the premium, following the trend. Then again, to validate your structural liquidity, follow me. That's why I said you should watch the video to the end. Follow me. To validate your structural liquidity, you need to mark out that swept the low that swept the previous high, or the low that took out inducement. This low that took out inducement, you mark it to the peak from here, from this to here, right? Then watching it, your structural liquidity must fall within the if you're taking a sell, must fall within a premium for you to take a sell to validate that structural liquidity. Now, there are invalid structural liquidities and there are valid structural liquidities. In another video, I'll be explaining in depth on that. There are invalid and there are valid structural liquidities. So you need your liquidity, your structural liquidity to be at the premium for you to validate that structural liquidity as something that is valid and market will respect. Because there are some that market will just violate, market won't respect, the market will just do like this, violate it. But for you to be sure that market will respect it, it needs to be where? It needs to be in the premium. Therefore, if you're taking buys to validate your structural liquidity, taking this to mark down, hold on, taking your fib tool to mark down from there down to here. Your structural liquidity must fall within your discount zone on the setup after finding your premium and discount on the chart. Right? I don't know if this makes sense or if you understand it. But with that saying, if you can backtest and you study well, you'll be able to identify them on the chart. So this liquidity needs to fall within this liquidity. So let me go to GBP card and show you what I mean. So on GBP card, for this cell, what do we have? What do you see there? You can see that this structural liquidity falls at a premium zone. So it was a valid structural liquidity for ourselves, and I took the sell. Same likewise, I would do for buys. Let me go to these other points. These other points I showed you the setup. Okay. Likewise for these other points. Marking out from here down to here. Okay, see the liquidity, the structural liquidity is inside the discount of the structure here, of this structure. Can you see it before the tap and then the buy? Checking this also here, you can see this. This is the low. Hold on, this is the low. It's valid. It was valid. So for this to be valid for buys, for your structural liquidity to be valid for buys, to know that market to respect it, it needs to be in a discount zone. Then inside the structure, then for a sales, it needs to be in the premium. Then for your structural liquidity to be valid, like I said, for that setup to be valid, it needs to fall where? In the discount zone. So for the buys, putting your Fibonacci 2 up, you see now this is discount zone. And why all this played out? Because they were in the discount zone. So all these buys I took over here, all of these buys were in the discount zone. And if you're looking for sales, you should be in the premium. You should be here. You should be looking for sales over here. Looking for sales over here. Right? So that's that for that. You just have to study, backtest, and use the data I've given you so far. So if you have any questions, you can ask them in the comment section, right? I'll be active to reply any questions any one of you have. So kindly, if you're new, subscribe, like the video, and share to as much people as you can. I still remain DF Basy. All right, thank you very much. Remember, study hard, trade easy.